We back, team. How's everybody doing? Did y'all make any good trades, some good profits, or y'all sitting on your hands waiting for the next trading opportunities? Yep, without being further said ado, let's go ahead and get this party up and jumping, y'all. Let's go ahead and take a look at the charts. Let's go. All right, we are back in the building, Let's see what we got. Let's see what we got right now. I'm still anticipating that 590, that 495. I mean, I know me and Active was talking about, not Active, me and AK was talking about that earlier, but I still think I see room at this 490, at this 495ish mark. And I'm gonna tell you why, because I mean, right here I see a lot more opportunities. Well, bouncing opportunities where the buyers did come in around this five. I mean, I can put the number two to show you. I ain't lying. It was like around 495, 496, somewhere in this bracket. Let me see. Go down. See right here? See, I'm anticipating for us to come down to this key level here. I mean, we got room to still fall right into this area where you had to bounce. If you go across the board, we have room to fall right back down, and it's lining up right with the downward portion of this downtrend, the lower part. So I do expect a little bit more pullback to take place. I'm not saying that. I mean, it could happen today. It could happen tomorrow. I mean, we could, stall out here and then catch another gap down for tomorrow, or, we could, those bears could come in heavy and yank it down today. I mean, we only almost about $3 away, because right now we're in the 498s. So we don't really have too much room to still fall to this key area, which I still think we could get it today before the market ends. So I'm gonna definitely keep my eyes peeled. We got about 30 minutes until power hour comes in. Looking for puts on SPY. We want to get a better entry. Shoot. Yeah, your entry would have been, well, let me see. See, had you would have got in. That's why I said. See why I mentioned that 504 though, Coldplay? Why I kept telling everybody about the 504, because you got in the 504, you could have just been riding this down. I mean, not having to worry about the entry. That's why I kept yelling out 504. Let's see. But I still think we got room to fall back down to this key level of this 594.95. I mean, right here where it makes sense, where you get this bounce, or go across the board. I mean, you got room right here, this 495. So I still think we're gonna fall down to that area. AK said he don't think we will. I think we will. I honestly think we will fall to that area. So I mean, I know I'm not stepping away from my entry. Not my entry, but my prediction. So I still think we got room to still fall to that key level. I'm still not gonna change my mind for that. All right, 50. What did I change that number to? Was it 50350 I had? Yeah, 50350. Yeah, put that back up. So yeah, if you would have got up here right here, Coldplay and Marty, if y'all would have just took that area around that 504 that I called out, look, y'all wouldn't even have to worry about entry. Y'all still would have been falling riding that bad boy on down. That's why I called out 504. I couldn't get in it because I didn't have no day trades on my small account, because I used all my stuff, used all my trades just the other day. But y'all could have got in. I called out 504 right here because I told y'all we got rejected at 504 right here once, twice, and look what happened. Rejected. And then when I told you, if we're going by twos on SPY, you're going from the 506, 504, and I told y'all what would be next, 502. And if you go by twos again, what's after 502? 500. So if you notice, all they're doing is going in a layers of twos. You're going from 6, 4, 2, 0. So if you notice, 6, 4, 2, back down to 0. So, I mean, what would have... that would have been, boss, I'm just saying, do you know how much you would have been on that trade already? Had y'all would have jumped in at that 504 mark I called out, 504, and then just rode that bad boy down. I mean, a nice little move. I mean, y'all could have got in around the 504, 50350, just to check, just to make sure that we was going to crack that 503, because we did have that, on that summary, we did have that, what was it? I was in the 50350. I got out when it bounced slightly. But I mean, I know it's bouncing slightly, but as I was telling you, all you had to do, like I said, all you had to do is just make sure and then go back up to your entry. So if you would have got in, okay, you got in at 50350. That's why I was just telling you to be careful, just to watch it, just in case we do run back on up, but just to watch that 503. But if you noticed, when we did go back on up, Coldplay, we never went all the way back up to 50350. So after we did crack 50350 here, you can notice what was the high on this candle. High was 503.39. This one was 503.34, so you was losing traction. So once we came back down, all I was just telling you was just to be careful, watch this area to make sure we didn't get a bounce back. But as long as it stayed away from your entry, I mean, you were good. As soon as we was coming back up, as long as it didn't come back up to 503.50, which is why I told you to get in at 504. Because had you would have got on 504, you would have felt less stress. That's why I told you to get in as high as you could, because the main focus was 503.50. So had you would have got in at 504, you would have had enough room at you would have had 50 cents here, and you would have had $1 here from the 503.50 to 503 itself. So as long as it's not going back to your area, so like had you would have got in at 504, all you had to do is make sure that they didn't go all the way back up to 504. So as we was coming back down for a bounce and it wasn't going nowhere near your area 504 and it just kept fading, you just could have kept holding. That's why I told you instead of getting here, to get up here to 504, because they would have gave you a little bit more cushion and less stress in that area. Because right here, getting in at 503.50, which is nothing wrong with it, but you still got to deal with the areas of that 503 to see we're not going to ping pong back and forth in that area, because we did have rejection here that could have held up as support, but we did crack it. It came in strong. But again, had you have been at 504, you could have just again, watched it, just observed it, just to see, we did get a bounce back. Was it going to go back to your entry of 504? Because 504 was the top, and after that, I mean, it just kept falling. 503.50, 503, and just faded on out. That's why I just tell you to get in good areas of accountability. That's why I kept yelling out 504, 504, 504, 504, instead of just 503.50, because we didn't know what was going to happen in that area, because we knew that was an important price point, was 503.50. But again, had you would have got in at 504, you could have just been testing it. Okay, we had 503.50. All right, boom, we cracked 503.50. Okay, down to 503. But your entry would have been at 504. Okay, we're coming back down to 503.50. Okay, we're cracking 503.50, down to 503. Let me see if they're going to jump back up to 503.50 and try to re-break it. All right, nope, they didn't re-break 503.50. Up, still fading. Now your entry is so safe, so secure, because we never went back up to that price point, ever. Hit that 504 and fell. And I mentioned it because I told y'all what happened right here. We did this yesterday when we ran up to 504. I told you where the bears were located. I said 504, 504. And I told you, I mean, just like the day before, what was the next area? 506, 506, 506, 506. That was the day before. So we're going to yesterday and today, we have 504, 504. So if you notice, it's moving by twos. 508, 506, 504. And then what else did we move down to? 502. What else did we move down to? 500. All we did was move slowly down into the price of twos, which is why I was telling you getting the 504s. So therefore you would have had an even number, right? Because the market goes by twos. SPYs go by twos, which is why Coldplay, I was telling you to get in at 4. Because again, if we played SPY by twos, right, you'd have been in a good area, because you already know from after 504 what's next. 502. After 502 was after that 500. So look how much room you would have had to move down. That would have been you would have already been up $4 already. So if you would have had 1,000 shares at 504 and you go all the way down to 500, you'd already been up $4,000. Let me see. Come on, I'm trying to make a $1 here. Cisco, what you trying to go for, boss? Are you trying to go for a put, or are you trying to go for a call? Because I still think we have room to fall still all the way down to this 5. I'm still not giving up this number, 495, because you have room to come down to this specific area. You got that trend line that it can bounce on off, and then that 495 makes a lot of sense because we already had past history in that area. So we go back, as I mentioned before, around 495. You can clearly see we already had made history in the past in that area. So we go back real quick. Let's go back right about here. So as you can see right here, we bounced around 495. Boom, we bounced. So we know that around this area is where you have a lot of buyers and we have a lot of demand, because every time we would hit around this area, we will move up. We will hit around this area, we will move up. So as we are coming back on down towards that key area, what area will make sense as we come back down this way? That'll be 495. Why? Because we have history around 495 that held up as resistance at one point. As you can see, we got rejected, came down, and it held up as support at one time when we stayed on top and moved up. So that area, to me alone, would make sense around 495. Plus, you're falling right down where this trend line is at for a potential trend line bounce back on up. So that's why I'm anticipating 495. I mean, we could get it, like AK was saying. I mean, I agree with him too. I mean, we don't have enough bull. I mean, not enough bulls, but enough bears to yank it down. I mean, we could hold up in this level and then see a gap down tomorrow to that level, of course. But for me personally, well, again, I don't control the market, but I would anticipate and I would want SPY to pull down as low as it can, so it can set itself up for a possible squeeze tomorrow, where we can put all the way down now to 495. Have your buys move in, hold this key area where we start to slowly rotate off of this support line, kind of like we did here, how we ran and shot right back on up, and that area is around the 510s. So if you notice, I wouldn't mind a pull back down, because this area has proved to me that it has held up as support. Because every time we came down around this area, what happens? Buyers move in, we go up. Every time we come down, buyers move in, we go on up. So as we do come down around the same key level, I wouldn't mind a pullback for a possible bounce where buyers can move in and push it right back on up. So that's why I would wait personally, not y'all, but I mean me personally. I will wait for a pullback down to this key level that makes sense, and then you're around the trend line, which can be possible support too, because you'll also have the trend line and the 495 together as one, as a double support, where you can bounce and start to slowly move your way on up, back up towards the areas of 500, to the 503.50s, to the 505s. So me personally, I would wait for a pullback. I mean, if I was gonna get in, or especially on the swing for opportunity, for a possible bounce, because we could possibly squeeze for tomorrow. But just still sitting on my hands, just still waiting. I mean, I'm not doing anything. Well, I can't trade anyway. But me personally, I still think this area is a good area for support. So right now, it just seems like it's channeling. It's just channeling right now. So it's still no breakout, no crack down. So, but I still think we still have room to fall down to this level where we can slowly bounce our way back on up. Because that will give you room. Because if you think about it, it would rotate, from your tops, rotate down to your bottoms, and possibly back up to the tops. So that's what I would do. Because, I mean, it looks like it's in the formation of a rotation. Because we already rotated at the top, as you can see. Top, 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 top. Now we're rotating from the tops now to the bottom possible support area, where you can rotate right back on up. And as you can see, it looks like it's getting weaker, like it wants to yank down to this trend line around the 495s. But just waiting on it, because those bears have to come in and take out the 500s, because as you notice, it's still playing around at 500 range. So they definitely have to come in and push it down towards this 595. So, where's my chat box? I apologize. I ain't even seen none of my stuff come on. Let me go ahead and block these while I'm at it. All right, cool. Where's my... All right. What you got, boss? What you got? 500 touch may be where I get in for a scalp on down. How's today turning out, y'all, for y'all? I didn't trade SPY today, Gert. Like I said, me personally, I already had made a swing trade this morning off of SMCI, and it did come down my way. I went in for a put at the 960 mark, and we did pull back down to 920, which was a $40 mover. So I was good. I was good. No complaints here. I take that. So to me, that was one of the best plays, one of the best swings I ever did in my life. I mean, it worked out so perfectly. And we still like moving on down. So where we at right now as far as SMCI? Around that 940-ish mark. And we are slowly still coming down, back down towards this trend line. Let me try to see any more highs. See, the only other highs I can see from this point on SMCI is now the area that I entered in now, which is now resistance. Now it's no longer support at 960 for, run up to 960 for a move back on down. So, I mean, I can see that happening. So I will sit on my hands, keep this on watch, because we did run up to that 1,020, back down to 1,000 when we started to slowly fade of 980. Then we lost 960 down to 940 for a bounce back up to 960, but we got rejected. That back down to 940 for a possible move back up to 960. So which we know in this area is going to be resistance, because every time they push it up, bears come in. They push it up, bears come in. They push it up, bears come in. The only area we do have left is it's probably about to happen already. I probably missed this shit. If we do lose that 940, you do have room to still fall back down towards that 920, back down to that possible 900. And as I told you already, how does 900 work on SMCI? We rotate around it. So if we take this line here, and I'm gonna put it white. I'm putting in a thick line here. I'm putting it white. So as you can see, we rotate around 900. Whether it's on the downside or whether it's on the upside, we always come back to 900. We always rotate right back close to us like a magnet. So why? So that was the reason why. Another reason why I went on that push, and I went in for my puts because I'm like, okay, we already left from that 900 mark, right? We left from that 900 mark on the upside. So I got in on anticipation to rotate back down to the downside towards 900, which is why I got in around. I could have got in higher, don't get me wrong. Could have got in at actually 980 or even 1,000, but I got in at 960. I did jump the gun a little early when I got in on my swing trade, but everything worked out in my favor, and we got rejected, and then we actually pulled all the way down from that 960 area I was in all the way down to 920. So that worked in my favor. So right now, I feel like I already, man, these are the tops right here. I want to see if we're going to get some more fading, but we still on top of this trend line. They can still hold up as support, so I really don't want to test it now because I feel like we already went on our first move on up. I already caught the best move here, so I don't know where these bounces going to start to occur as of now. We know right here on this trend line, we already bounced once, so basically I don't know how low now we're going to go, where buyers are going to try to move in and hold it now from this point because we already went up. We already came down. We already bounced this first bounce. So I want to see where we're going to actually go from this point. But I did catch that first move on up. Of course, I did catch that one. So if I had day trades, I would have definitely got in here, back up towards my entry, and I would have rolled it right back on down to 940 because that is a $20 mover. So if you get in at 940, definitely ride that bad boy. At 960, definitely ride it down to 940. Boom, done. So I'm going to have to watch that because I do want to go for another swing trade, but I'm just trying to figure out how much more do the bears have left in the tank before those bulls actually start moving in to try to push back on up. Right now, we do have room to fall back down underneath this trend line on SMCI, basically with the rest of the candles. Because any other time you were underneath that trend line, you will hit, you will fall, hit, fall, all the way through, and then you so happen to break out this time. So I can't imagine it's going back underneath that trend line. I can't imagine that. When would that happen? So the only way to kind of figure that out, if I use, is the summary. Oh, I'm sorry, y'all. I'm about to check it out. I was just trying to break down my thought process on if I do go for a swing. I do apologize. SMCI. So let's look at the contracts for tomorrow. Let's see what we got as far as the contracts. We do have a max pain of 937. And next week you'll have a max pain of 950. So I have to keep my eyes peeled on that. So 937 and 950. So we could pull back down to this, which we already around, because that's the 940s. Up. So that means that for 950 we have to go up. I'm gonna keep this on watch to see what we got. I'm gonna have to watch my patterns. All right, let's go to SPY real quick because I know y'all was talking about it. Let's see where we at. See, we're still channeling. We're still like in somewhat of this channel on SPY. So we haven't cracked it yet, like all the way down to where I wanted to crack. Never came down to that mark. It looked like it wants to. We got room to fall back down to this line. See that? We got room to drop back down to this 96, 95-ish area. So I'm just seeing that we're going to get it. We get it. I wouldn't mind going for a swing trade, way down to these lows where we could potentially bounce. So we do get it, I might go for it, but until we get it. Other than that, I'm not chasing it. I'm not jumping in too early because just in case we do pull back down, if we don't hold this key level and we pull back down towards this level that I'm anticipating, 495, 496, 495, I'll just wait it out. There's no rush on my end. I'll wait. Matter of fact, what is the option chain on SPY? I forgot to check that out. I actually learned more towards calls. We're giving the indicator. Yeah, like I said, all I did, to be honest, Coldplay, all I did was just play this trend line. That's all I did. Every time it went up towards these highs, I shorted. Up top towards these highs, I put in a short, put in put, and then towards these lows, I go in for a call. So I already know my tops are, my resistance are, but look what happened. We fell, and we're coming down towards possible support. So now we get more towards the call side versus the put side. So, shit, what did I do with my chart? Where you at? Oh, here you go. So even if I put the colors on this one, this way, you can clearly see it. So even if I do this, and I change the colors on this bad boy, and I put it the actual colors that we used to, So right now, I'm gonna just leave. We're gonna put the channels back later. As far as the 505, 507s, just right now, and we're gonna just focus on pretty much. All right, this key area here. So you already know this is resistance. We know for sure this top portion is resistance. I mean, if y'all, I can put it red if y'all want me to, no problem, because that'll show that that is the resistance mark. All right, so that'll be resistance, and this area will be possible support. So that'll be in green. So as you can see, boom, the color, damn near the candles match. You hit red candle, you hit red candle, matching the red line. You hit red candle, matching the red line. Boom, you hit. So you can see what resistance is. And then every time you come down to the green, look at the colors of your candle. Look how it affects the colors. Look at that. So you know where the buy's at, right in the green. So that's a push right back on up. Boom, boom, boom. So all I'm doing now is getting closer and closer, potentially to this green area, towards the 495. Because again, we did have buyers come in around that area where we pushed on up. You see right here this W pattern where they came in around at 495. So all I'm doing is waiting on a possible pullback even lower where I know buyers can possibly move in and push it right back on up. So that's all I'm doing is waiting at this moment. So right now we are, damn, we still haven't got cross power hour yet. We still got like 6 minutes. So we'll see what power hour team to see what happens. So we know this is resistance because the 504.50 hasn't been broken, and we know what possible support is. So if we look at it from this standpoint, or this channel, if you want to, we can just look at this for right now, for the moment, until we break above 503.50. So till then, 503.50 is going to be resistance across the board, and then we know that possibly we can get a bounce off this 495-ish area where support could be. So you can clearly see it across the board from your resistance standpoint, from your support standpoint. I mean, look, it's in a channel. Look at this, between the channels. Look, you notice, y'all notice that? The 503.50 down to the 495. Look how it rotates between that. That's another channel. Look at this. Another channel. Boom, boom. Channel, 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 breakout. Now look where we're at. Right back in that same old channel that we were in like in the past. So y'all notice that? Channel, 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 channel. So that's the top portion. This is the bottom portion of your channel where you rotate up and down until you break out. And you can see right here, we're going back in the same channel. Boom, 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 same area. So we didn't jump right back into it. Yeah, so I mean, but Coldplay, you notice that channel? You notice we were in this specific channel of 503.50 to 495. When we went up, rotated down, rotated up, rotated down. Then we broke out of 503.50 and went on that run. All we doing is going right back into that channel. See that? We left from out of this channel here and came right back into it. That's pretty much all we did. We rotated right back into that same channel. So if I do this, boom, look. Booyah. Same channel. Same channel, team. Right back into it. So we left out of that area, went running all the way up to that 525, and then found ourselves right back in that channel, 503.50 to 495. There it is. So we figured that out. We figured we back in the channel, in the old channel pattern. So we do pull back, which is why I'm anticipating this 495, because every time we hit the bottom of that channel, you go up, back up to 503.50. You bounce off of 495, again, bounce, 503.50. So we coming off of 493.50 back towards the 495. So that'll make sense. So you broke out of 495 to get to 503.50 and break. Now you're going from 493.50 down to 495. All you're doing is going backwards. So instead of going from here to here up, you're going from here to here down, possibly, if we can get that bounce. So we know the channel that we're in right now. So that by looking at this channel going across the board, that lets us know we have room to still fall to this key area because we are back in this channel. Because look at the room, look at the space. 490. Look at this, 503.50, 495. Look how it channeled in between this price point. So imagine if we back in this channel and we already hit the tops of 495, 503.50. Where you think the bottom's gonna be at? 495. So meaning that we got room to still fall to 495, which is why I was arguing with AK. So nice to see SPY is moving. Let me say moving last week. Yeah. Okay. Yeah. So we back in the old channel, pretty much. So again, we got room to fall back down to that low. I mean, from here to here, same channel, same movement, same rotation. 490, 503.50, 495, 503.50, 495. So where we at? 503.50. We're 9 times out of 10 we may go 495. So possibility, team. I mean, we could see a pullback still. So which means that, I mean, we could see a bounce at 495 possibly. But the only issue this time, like I said, the fact is we going down instead of up. That's the only issue. Because when we was going up, that helped us on the upside. If you notice, 495, 503.50 helped us going up. But now that can be helping us go down, where you go from 495 back up to 503.50 for a possible reversal. So we'll keep it on watch, team. But I know for sure I'm still sticking to 495. I'm still sticking to this area. I'm not letting it go. Still sticking to this. So now that we done figured that out, so all we got to do is just see where we're going to move from that point, from this 490. From the 503.50 to this possible 495. So what would be the midpoint between this and this channel alone? Would be somewhere in this area. We did bounce. That is around. Cause see, 500 is way up here. But it's something below that, just a little bit below that. So where would that actual area be in the middle that's going to cause that rotation to go up and go down? Because I know we bouncing here, we bouncing here. I'm just trying to figure that out. I mean, I keep seeing 499. Where you bounce off and then you run back up to the upper portion of that channel. You bounce, go right back up to the upper portion of that channel. It's like 499-ish. Let me see, 499. It's 499 something. Let me see, 499. Put that in yellow because that'll be our pivot point for the moment in that little area. So right here where you bounce, so you stay on top of 499, you can run back up to the 500s. Below 499, you can fall back down to the 495. So that does make some sense when you're rotating from the upper portion of this channel. And if we crack that 499, we'll fall back down possibly to the lower portion of the channel. So this seems like the pivot point for this little channel, 503.50 to 495. With that mid area of 499, when you do bounce, run back on up to the top portion of the channel, bounce, run back on up to the top portion of the channel. Now we're back to this pivot point of 499 again. Sorry, Fidelity won't let me trade. Oh, damn. Let me see. I always trade the next day. See, I do the same thing. Well, especially right now, you have no choice but to do the next day. Because you don't want to get caught. Me too. Never. Yeah, no. Yeah, I never do this. I mean, especially getting closer and closer towards. I mean, because you don't have enough time. Yeah, you definitely don't have enough time. And then you don't know if you're going to get a straight move up, a straight move down, or get stuck in consolidation if you're using the same day contract. So, me personally, what I do, like once it get past 12 o'clock, lunch hours going into the new half, 1 to 4, I would normally just use the next day contract. That's all I do. I use the next day contract over. That's all you would do. But don't use the same one now, as we are getting closer and closer to the market close. Because, again, you don't know if you're going to get caught in consolidation or if you're going to be able to get out. Because you got to understand, once you buy into the same day contract, your reliability is those buyers. If you have nobody to sell it to, because you got to understand, you go from a buyer to a seller. Because you had to buy from a seller to turn you into a seller, because now you have to, sell it to a buyer. So if you don't have any buyers, you're going to be stuck with that contract until your broker gets you out. So meaning is, don't use the same day contract. Especially around this time, don't do that because it's very risky. You don't know if the buyers are still going to be there. Because you got to understand, when you buy in today, you are now a seller trying to find a buyer. Because that's what it's really based on. It's based on those buyers who are still willing to get a soon-to-be expired contract. So that's why you don't do that. Exactly. Yeah, you can always sell. Yeah, just like what he said. You may not like the price. I mean, that's why I'm like, nah, don't do that. It's way more riskier to do a same day contract now. Because again, those buyers may be trying to leave. Definitely trying to leave. So I would not put myself in that position because again, it all depends on the buyers who's willing to take your contracts because now they're gonna be stuck with it until the market closes. So that's why I'm like, nope, don't do it. Because if they don't buy it from you, or if you don't get the price you want, as Marty was mentioned, you just have to hold it until your brokers get you out of that position. Because trust me, I've been in that position, and that's why I'm speaking on it. Because I've done it plenty of times when I first started option trading. Because I didn't know how to really use it. I mean, now I know how to use it, but now it's like, no. What's it called? That Elise gonna push. All we gotta do. Okay, power hour. Like I said, right today's the 18th. So let's see how many contracts will be expiring tomorrow. So let's see if we can use this to the best of our advantage. So let's go to again SPY's option chain contracts to see how many puts versus calls will be expiring tomorrow. Tomorrow is the 19th. Again, we got 2.7 million puts expiring with the max pain of 500. We have 983 out of the money calls. So you still have way more puts than you have calls expiring tomorrow. So, and with 500 being the max pain on this contract, we're already around 500. So we already have max pain. So again, that area can be used for calls and puts because as long as you stay underneath it, the 500, it can work in a puts favor because you can ride it on down. If we get back above 500, then it can work in a calls favor when you can ride it on up. So that's why that max pain is 500. So we already know what the major area is as far as your max pain. So personally, see, if you get back on top of 500 and hold, I mean, we can definitely see a rotation back on up because that means your calls are holding that 500 mark. However, if you stay underneath 500, that'll work in a puts favor where you can get that further push on down that I mentioned to that 495. So, and we know what a max pain is at. It's almost like the rotation. You want to get away from that number. So, if you're going in on a put, you want to go away from 500 as much as possible so you can slam back into 500. If you're going in for a call, you want to get away from 500 so you can run up the so you can get the 500 so you can run above it. So me personally, if I know 500 is my max pain, right? I know 500 is my max pain because that price alone, 500 can work for either or, bulls or bears. If I wanted if I wanted a call, me personally, if I know what this area of resistance is possibly at, I would rather fall back down, get in at these lows so you can rotate back up towards an area that can be a possible resistance. Because I'd rather get in around $4.95, $4.94, where that'll give you a $4, $6 advantage back up towards that area that may still hold up as resistance. Because therefore, you can get out of your position and not get stuck in it. Because you don't want to get in at 494 and 495 and then still hold it, not get out. Because you got to think about it. From 494, 495 back on up towards that 500 region, you're already up $6, $5 in that area. So it's like, okay, why not take that profit? Because you don't know if you're going to break 500. So I will wait for a pull back away from it for a rotation back up to it. So as you can tell right here, you rotated from it, but you rotated right back to it. So that'll be a perfect put opportunity because you came down, and a call opportunity because as you seen, you bounced, boom, get out, and then you rotated right back on down to right here. Why did you get out here? Because that 503.50. All you did was rotate from 500 up to 503.50, and then you rotated right back down from 503.50 here. You notice the rotation? Boom, calls, boom, puts, boom, that's it. So now, all I would do is wait for the rotation because you can easily fall, right, and then rotate back on up. So that's why I'm just waiting to see where we go because if we do go on, like we do drop, I go in for a call for a possible rotation back up to 500. That's a possibility. But I'm not going to get in at 500 because I don't know which way it's going to go. I don't know if 500 is going to hold and we run back on up. I don't know if 500 is going to crack and we actually come down. So that's why once you put it like this, Marty and Coldplay. See, the way I work my pivots is I like to get away from it. Okay, if I'm going in for a call, I'm going in for a put. Once I start to familiarize myself with my pivot point, okay, I'm not going to buy at the pivot point. My thing is I'm going to wait till I see some type of reaction. Like if I'm going in for a put, say for instance I want puts because I know it's a bear market. I will wait for a bounce on up. so I can catch it toward away from it for a slam back down to it, because it's like a magnet. You're gonna retract back to it regardless. You're gonna leave from it and you're gonna find your way right back to it. So why not take advantage of this magnet-like situation, this magnet-like position, so you know once you leave from it, it's gonna slam back into it. So if you know that to be said, why not going for a put away from it? So 9 times out of 10, you'll slam right back to it, into it. So that is for 503.50 back down to the 500 range, which is a $3.50 profit. So from that point, oh man. But yeah, I mean that's how I treat my pivot points. I like to get away from it. That's why I want to see a move. Okay, if we fall from it, like on the downside, I want to see it rotate back up to it. So that means I'm catching lows where we can rotate right back up to it. Now we on the upside, I want to see it go up where I can go in for a put back down to it. Because all it's going to do is rotate on the upside, or it's going to rotate on the downside around that pivot point. So that's when you go for your best moves. And that's all I do. I just wait for areas I know that means something. I want to see it get away from it so I can go back to it. So again, if I go on the upside, 9 times out of 10, I'm gonna return right back to it, like your 503.50. You leave from that 503.50, you return back to that 503.50. Same thing as your 500. You leave from your 500, you return back to your 500. I'll do more of a put side only because of the market is bearish. That's the only reason why. So I would be more leaning towards a put than a call, because the market is going down on an uptrend, meaning that you have more opportunities on the downside than you have more opportunities on the upside until the market itself reverses. Because right now, as you can see, we fell from the 525s. We all the way back down to the 500s. So why would I still be going for a call at the moment until otherwise? I'm still waiting on 495 because I want to see the buys move then, because we already went over that price level. We know that area where buyers can move in and go on a strong move, and that is around that 495. So until then, I'll still play puts back down to that area. So it's easier when you take it all in and you see what you're. Yeah, I mean, I had to learn. I had to do the same thing. I had to learn. I had to definitely learn from my rights and my wrongs. So this area is still holding 500. So if we do hold, that means that 9 times out of 10, we're going to hold the upper portion of this channel where you can start to rotate yourself back on up. So definitely keep your eyes peeled right here at this yellow line to see if this is going to hold and rotate. So let's see, take a closer look at that. Right now we're at 15-minute time frame? 15 minutes, 15 minutes, 15. Come on, scroll yourself over. All right, cool, here we go. So anytime you hit we're already still rotating at the upper portion of this frame of the channel. We stayed in the upper areas of 500 to 503. We still haven't cracked it and got down to this 495. I apologize. So as you see, all from yesterday until today, all we really did was rotate from this portion. That's it. 503, 500. That's all we did from yesterday until today. All day. Look at this. 500, 503.50, 503.50, 500, 503.50. 500. All we did was rotate up and down, up and down, up and down in the same area for 2 days straight. So now that you're already at the 500 area, where do you think it's going to possibly try to go? Back up to the upper portion of that channel, which is 503.50. So as long as we stay on top of the upper portion of the channel, you got room to run back on up. So that's why I just say keep your eyes peeled. But I wanted that 95, boy. I wanted that 495. That's what I wanted, because I wanted the 495 first and then rotate back up to it, because that would have gave me way much more room. Because us rotating back up to the 500s, possibly back up to the 503, I would have gotten a good solid area that gave me more than enough room to rotate back this way. I'd have been fine. But we are just still rotating in the upper portion of the channel, here to here to here. That's it. 2 days in a row. 503.50, 500. 503.50, 500. Up, down, up, down, up, down. That's all we've really been doing. That's really it. So just keep it on watch. So right now it's still sideways, which again, the only issue I'm gonna have with that is when we were on the left side of our channel, on the left side of our chart, that's when we were on the upside. We would channel and break out. But the way that this is setting up now is channeling and cracking down. So, which is why, because we're in a bearish market. So it's not working in our favors as it did when we were on the upside, with how we would catch channel breakout, channel breakout, channel breakout. Now we're doing channel crack down, channel crack down, channel crack down. Because if you notice, when we're here this way, we would channel breakout, channel breakout, channel breakout, channel breakout. Now it's reversed. Now we're going from green to red when you channel crack down, channel crack down, channel crack down. As you notice, it's doing the opposite now. We're doing the total opposite of what we were doing before. So that's why I'm anticipating a channel possible crack down instead of a channel breakout. Because again, we are on a downtrend. We are in a bearish market where we have way more sellers than buyers. I mean, you can look at the candles going this way. We have way more red, 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 red versus these greens, where it looks way more bearish than bullish going this way. When we were going up, we had way more green candles going up when it was bullish, 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 bullish. But now everything's reversed. Now we find a downtrend where it's bearish, 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 bearish. So again, instead of channeling going up, channeling going up, channeling going up when we were on the left side, we're basically channeling going down, channeling going down. So it's doing the total opposite of what it was doing before. So that's why I'm anticipating for us to still see 495. Because again, your channel, fall, channel, fall, channel, fall. So again, we're doing the total opposite of what versus on what we were doing on this side. So we're no longer going up, we're going down. So you have to have the downtrend and bearish mentality for now until the market can reverse. Once the market reverses, then we start leaning to have a little bit of confidence as far as on the bull side, the green side. But right now we're bearish. There's fear in the market. We already seen the fear and greed the fear and greed meter, where we now in the fear meter. So it's way more bearishness than bullishness. So with that being said, we haven't quite found an actual bottom until me personally, we get around this area where that makes sense, where you bounce. So you got room to still fall because we are still in this channel. So we only at the upper portion of the channel, but we haven't touched the bottom portion of the channel. Like here, same area, same price points. 503.50, 495. 503.50, 495. Go across the board. 503.50. What have we not touched yet? 495. So but with that being said, that's indicating to me that we're gonna see some more downside. So that's what that's indicating to me. That's what it's telling me. So that means that we have room to still fall because we're in this channel. So this is only the upper portion of the channel from this 500 to 503.50. We still haven't cracked this to get to the bottom portion of the channel, which indicates that we still have room to fall down. So that last pull, what I'm saying is that last pull can be the last drop close to that area where we can actually start to move back on up. So that's why I'm anticipating for us to get as low as possible towards the area that can be considered a strong bounce, where we can get back off of 496 or 495, back on up towards the upper portion of this channel where you kind of rotate, because you're already rotating down. What we want to see is a rotation back up. So that's why I'm giving it some time to come down still, where you can rotate down and possibility to rotate back on up towards this line here. So you have to give it some time. We're still falling. So I'm just waiting it out. Because y'all can clearly see it. You can clearly see the rotation. So if I do this, because again, we were in that channel, we rotated up, rotated down, rotated up, rotated down, and then we got that breakout. Boom. As you can see that. So now what I'm anticipating in this one, we're in the same channel where we can rotate up. I still want to see this rotation down here when we can possibly move back on up. So that's what I'm waiting on, because it's lining up perfect with this trend line, perfectly with the trend line, and you got a sturdy and stable support area of 495 where you bounce. You can clearly see it here, same area. Now all we're doing is going across the board, so that's why I wouldn't mind a pullback down to the 495 where I can see some guaranteed bouncing potentials where buyers can be potentially sitting at, and for the possible rotation of this channel on the downside back to the upside. So that's why I'm anticipating this pullback a little bit further, where I can see a potential reversal back on up where we can actually start to rotate. So right now, we're just in a downward rotation. We're just still going down. So we haven't rotated up just yet. We're still going down, still going down, still going down, still going down. And this can be the area of a possible rotation back on up. So that's all I'm waiting on. So you can see it right here clearly. I mean, what do you put it? Okay, let me ask you this, Marty or Gerd, Coldplay. By looking at this 180 here, by looking at this 180 chart that you see on my chart right here, where do you see the rotation right now? Do you see any rotation at this moment? You know, do you see a rotation up yet? No. To me, it's still like it's falling from this red uptrend and still falling down towards the green downtrend that can lead to a possible rotation back on up. I mean, that's exactly what it looks like. I mean, tell me if I pressed the wrong button, but tell me if I'm blind or not. I mean, all it does is look like it's just coming from that red line, right? The red trend line, like it still wants to fall down to the green trend line and then possibly rotate back on up. See that? Look at that. Look at the channel. Pay close attention to the channel. Your bottom support, your top resistance, where we already fell from the top resistance and going back down where could be simply rotating to that bottom support where you can rotate back on up. So that's why I'm anticipating this possible pull, further pull back on down. So I still think we have room to still fall down towards this trend line. So that's why I'm just being patient and waiting. I mean, that's what it looked like to me. I mean, look at this. You can clearly see it, even without the lines. Look at this. It's just straight down. Look at your candles. Down, 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 down. Where you see a reversal yet? I don't see, just looking at this pattern alone, I don't see a curl up. I don't see nothing giving me no indication that, okay, we about to go back this way. The only indication I see that makes sense is this green trend line, and it's 495. Why? Because we have had history before in this same area. So it's not like we falling straight down with no history at all. We falling closer and closer to an area that has made history of support. Bounce, bounce, go across the board. What haven't we hit yet? Our old history. So that's why I'm anticipating and still waiting on the pullback. You see, yep, I was going to see if we were going to. Well, see, look, you're on the same page with me, Gert. So you see it. You see what I mean? It's still fading. To me, it's still fading. It still has room to fall. And again, if y'all notice, we are back. We are in this channel again. The channel that, because we was in this channel in February. We was in this channel for February. For how long? That's the question. How long did we stay in this channel? Let me see. When did we get into this channel? We broke into it February 7th, and we didn't break out of this to February 22nd. God dang. So we went up and down in the same channel from February 7th and didn't break out until February 22nd. So that was, god dang. So, yeah. So that was what, 5 days? Not 5, I meant, I said 5. No, 15. Was it 15 days? 2 weeks? Close to 2 weeks? Because that's the 7th, right here, right here, 7, and we broke out when? The 22nd. Yeah, so 15 days. So 2 weeks. So we stayed in this crap for 2 weeks before we actually broke out. Oh crap. So I mean, I'm looking at the date, you know, when we first entered into this channel on this calendar, which says February 2nd. February 7th, and we didn't break out of that channel until February 22nd. Well, that's 15 days. That's pretty roughly 2 weeks because you got to minus the weekends. So almost 2 weeks. Oh, shoot. No, I hope we don't stay stuck in this for no damn 2 weeks. Because now we back in it. so it's like it's almost like the same way but backwards. Because when we entered into it, when we first entered into it here, we had a green candle. You see that when we crossed into the green line? Now we entered into this one on a red candle at the red line. It almost looked like the same crap but backwards. That's insane. We entered in on a red candle back here, and then we entered in here green on the green candle here. And we stayed stuck in here for 2 weeks till we broke out. Now we back in the same freaking channel. Damn, that's crazy. Ah, God. I hope we don't stay here for no 2 weeks. I hope we don't stay in this for no 2 weeks. I hope not. God, dog. We played in this area for 2 weeks and then broke out. Oh, God. God, I hope we don't stay in this for no 2 weeks. Because this one was a W. This one could be an actual M. Since you know it's backwards. Not a M, but more of a. I mean H. I'm gonna say H, not a M. Because like I said, I can see the W here for sure, and that took to almost. Yeah, because that W started forming when February 12th, and again we broke out on the. So that was what, 5 days. 5 days they took, and we did this crap here. So what we're gonna do this way? What are we gonna do this way going down? Is the question. If we can again, if we can hold 495, we can rotate back on up. Man, I just hope we don't be in this channel for no damn 2 weeks though. God dog, I didn't realize how long we was in this channel. Cause now that I'm looking at it, when we first got into this, like I said, it was from February 7th. And we didn't break out till February 22nd. That was 15 days. Again, if you minus the weeks, the weekends, that was like 2 weeks. Ugh. It's going to be interesting. Because I didn't realize that till just now. I didn't realize that till I seen the channel. We got back into the same channel that we needed to break in order to even get out to the upside of the 500s. Now I'm like, okay, what the hell are we going to do this way on the downside now? Oh, boy. It's going to be interesting. This is gonna be interesting. Oh, this is gonna be fun. So we back in a 2 week channel. Oh God. Oh goodness. But instead on the upside, we on the downside. This is gonna be very interesting. Cause we know Bulls Bears is gonna be up here, and we know Bulls is gonna be down here trying to hold it, and Bears trying to keep them underneath. It's going to be up and down until we either break out or crack. Oh, crap. This is going to be fun. This is going to be fun. Shoot. Like I said, I hope we don't stay in for no damn 2 weeks. That's all I hope. I hope we don't stay in this range for no 2 weeks. God dang. I mean, well, shit, I can trade any other stock anyway. I really don't care. Might be the number one rule to, by the way, let me see. It's a killer when it comes on contracts. Same rule. Oh, what was it? Stuck to my rules. Trade until after 10. Look at the contracts. I probably would have traded it or did it. I mean, like I said, Gert, I gave y'all the prices of what to get in at the beginning with this morning. I mean, I told y'all the main focus was gonna be 504, didn't I not? Marty, Coldplay, all of y'all who's watching, did I not say 504? Even though I couldn't trade because I had no day trade because I had to get out of my swing trade. But did I not tell y'all? Did I not bring up 504? Did I not say that? 504, when a bearish market, I say go for that first, and boom, there it is. 504, and then you went from 504 to these bottoms. You would have been in a good little trade. A good trade. Easy profit, buddies. Easy profits. But I did alert it, so I would have got in. Like I said, how I would have had my trades, I definitely would have jumped in on this bad boy and took it. So tomorrow, let's see what we can do tomorrow. So as long as 500 holds. So it's gonna be in a channel. It's gonna channel. I can see this crap now. It's gonna channel like crazy. Cause you got so much resistance above you, and then you got that one support at the bottom. You got that 499 support, but you still got resistance now because the bears have taken over. For 504, 503.50, down to 503, 502, 502.50, 502. And down to the 501s, 500. So, I mean, it's going to be... I'll put it like this. It just don't look good for the Bulls right now. I'm gonna just say that. It just don't look good for the Bulls at the moment. Bears are literally all over the place. That's the only issue. Bears are all over. I'm talking about the overheads. Bears all over the place. Due to the lack of my patience, FOMO of a crack in the first 30 minutes, you are right. I mean, it happens, Gert. Trust me. I mean, especially when you're dealing with a born-ass market, excuse my language, when it's born and your emotion starts to kick in because of boredom. I've done it. I mean, you're human, boss. I mean, we all make mistakes. I've done it. Because I was doing so good at one point, but I got so bored, I got so tired, I got so frustrated because I didn't get a trade yet. I let my emotions get the better of me, and then I took an idiotic trade, and so I've done it. I've done it, but now I'm so cool, calm, and collected now, boss. It's like, you know. But see, what will make it better, what make that type of situation better, boss, is when you make a good, decent trade throughout the week. So if you catch a good trade, like say for instance on a Monday or Tuesday, say for instance you made two grand, $3,000 or something like that, then Wednesday, Thursday, Friday should just be like laid back. It should just be like less stress because you already got your main move out of the way. You done made your money, so now everything else you can just kind of play with because you done made profit throughout the week. So everything else is just play. That's how I do it. Like I waited. I mean, I got in on my swing trade. What day was that? I got in on it. When did we spike on SMCI when I got on my it had to be Tuesday. Because I remember I got off live Tuesday and I went in after that. It had to be Tuesday. Yeah, it was on Tuesday, because right here was when it went on that breakout. After I got on my live, I got in, but again, instead of going in the 980s, which I should have did that and been patient my damn self, I got in at 960. So I had to endure some pain. As it went up. I was down good 400 or 500, whatever the case may be. It will come down to my area. Because, dude, y'all got to understand my frustration. So, here I am on SMCI. I'm like, man, will we crack? Nope, it go back up. So it goes. Let me tell you how bad it was playing with my emotions, right? So, on my contract I got in at $14. And when that spike happened, it went from my entry of $14 down to $13, $12. I think the lowest it went was $10. So I was already down like $300 already at that mark from $14.10. Yeah, about $300. And I think the lowest it went was $9. So yeah, I was down to $400, $500. So the next day, I'm gonna tell you what pissed me off. It came down finally after it lost that $1,000, that $1,000 range. And it lost that 480 range. All right, here come my area, my entry. I'm like, all right. Now my profit's starting to move up. Tell me why the other day it went up to my entry because it started to turn my red to green, right? My entry was at $14. When this drop happened, it went up as high as $13.90. $13.90, and my entry was right here. What I was wanting was for the breakout above 14 where I could start making profits, 15, 16, on up. So that bad boy came up to $13.90, went right back on up, put me back in the loss. I mean, put me back in the loss because I didn't get out of it. I was still holding it. So I was like, damn, man, I'm in the red again. So I'm just sitting here like, ugh. So next day, today, finally, it broke that 960 and flush, and that was this morning when you heard we heard that chime on my thing because I finally got out because it finally broke past my 14 entry and it went up to 15, it went up to 16, and went all the way up to 18. I was like, yes, I got out. So, I had to do some pain, but I was confident with my trade. Because I already analyzed the situation as it was spiking on up. I knew that we were still in the bearish market. So, yeah, I had to do some pain because I did I kind of got impatient. I did the same thing, like I said, Gert. I got impatient. Instead of waiting to 980, that could have made my wins way more higher. I got it at 960. So, yeah, it went on up, yada, yada, yada. I was down, and then I evened out. Then I was down, evened out. Then I was down, even out. then all of a sudden, finally, again today, flush. But why? But again, why did I have faith in this movement or faith in my trade and my swing trade? Because of my patterns. That's all I did. Once I seen this breakout, I got in up here, and all I was doing was wait for the flush back on down. So I had to endure like 2 days, but it paid off. Boom. That's it. But what I'm trying to say is, Gary, just always have a trading plan. And you don't have to trade every day to make money. Wait on patterns to set up. That's all I did. When I seen this spike happen, and you know I really don't be trading SMCI like that. But when I seen this spike happen, the first thing that went through my head, I said, ooh, it broke through my resistance. So meaning that it's gonna return back down to my resistance because we are in a bearish market, and what goes up 9 times out of 10 will come back on down. So that's why I caught these highs for the anticipation for the drop right back down to these lows, and I caught it. So, I mean, you got to have the will and the patience to get in. I mean, you're going to have to endure a little bit of pain if you're in the right direction. Because I did it. Again, I was down 500. I was down 400. And then all of a sudden, when that drop happened, my red went to green, and I profited, and I got out. So, I was good on that. But, yeah. I mean, it fell perfectly where? To my trend line. All I did, I seen the breakout above my trend line here. We ran on up. I said 9 times out of 10, I'm going to find my way right back to where? That trend line. That's all I did. I just waited. Again, I had to endure the pain for like a day, but look what happened. Finally, patience kicked in, and look what happened. I waited. It went right down to where I needed it to, and I got out. Boom! And that was early in the morning. So I caught an early morning trade. I was done for the rest of the day. I was good. Also, the problem with, let me see, the 1 day or 0 contracts. Time isn't really an option. Gotta cut when. Okay. I'm gonna ask y'all this. Coldplay, and I'm gonna ask Gert this. How do y'all look for y'all contracts? Like, what do you search for to find the right contracts? You know, that you feel like you want to get in. Like, what's the main things that you look for on your contracts? And I'm gonna tell you what helped me. I mean, I just want to see what y'all answers is, or what what y'all tell me, y'all response, and I'm gonna tell you what mine is. I just want to see if we're on the same page, to see what exactly if you look for the same things I look for. Which is why my winning streak keeps going, because again, and don't get me wrong, I had to learn to take ass whippings in option trading because due to contracts, because I didn't understand it. But the more and more and more I got better at it, I started, man, again, I haven't lost ever since. But I had to take a few ass whippings starting off. I'll be honest with that. I'm not gonna lie. I took some ass whippings, and it was due to time decay. It was due to time decay. Shoot, what else was it? Volume for sure. Time decay, volume, and I don't really look at the theta. I'm not gonna lie to you. I don't look at my theta. I'll be totally honest with you, boss. I look at well, like I said, I'm gonna answer mine once I see what y'all have, boss. Let me see what y'all have. So Coldplay, Gert, like I said, what is y'all again what makes you pick a good contract? Like, what do you look for? What are your signs? And again, I'm gonna just share mine with y'all. Cause I mean, we family, man. I don't hold nothing. It's like not gonna secret weapon, like, oh, I got a secret recipe. No, just all right, I look for a contract within 25 points of the ITM. Contract, at least 2,000 open interest. Okay, so you do look for the open interest. That's what I do too. Okay, so we're on the same page with that. Well, volume, definitely. Okay, volume. On the same page. Okay, with that. Cool. Yeah, SPX. That's what I do. I do the same exact thing, Gert. So I look for the open interest. Matter of fact, let me go to one real quick on how I look for my contracts. I'll show you how I do it and why my win rate so high. Where's my detach? So if I'm looking for a volume, looking for a contract. All I do is, okay, say SPX. If I wanted tomorrow's, because today is over, so I'm not gonna worry about that. 19 tomorrow. So all I do now, what I do is I don't stretch it out too high, like my strikes. Like I don't. Now the only time I go out like to 50 or 100 is when I'm in SMCI, because the SMCI they so damn expensive. But other than that, like when I'm dealing with SPX, I normally keep it at a 20. You know, I try to stay like in this range as possible, because then the reason why is because the more it stays kind of compacted, it stays a little crunch, it keeps all your good ones in. So that's the reason why I stay like around the 20, because your delta stays real healthy. And that's the main thing I look for, is my delta. So I look for like 25 and up. And then after that, I look for my volume. I look for my prices. I look for my volume, see how good the volumes are. Like you were saying, open interest and my normal volume. You know, as long as we're in the 10,000s, 14,000s, anywhere like that where I know it's healthy, good, that gives me good signs, I'm good. I got good delta, I got good open interest, I got good volume, I'm at a good affordable price, I'm not too far out of the money, everything is good. All right, cool. So, and that's just how I do it. And that's how I make sure that my contracts, I got good, healthy contracts, and I'm good to rock and roll with it. But that's what I do. Again, I keep it at a 20 strike price. I keep it very compact, because the minute you go too far out, you start to get those shitty contracts. So, say for instance, I go to 100. Let's say 100. Let's go to 100. Stretch it out. See that? Look at that delta. One. No volume. Horrible. Keep going down. Look at this. Look at that. I mean, it's horrible, man. Your volumes is not high, your deltas is not high. So the only way to weed that out, and what I do, I go to 20. It takes the rest of that crap off of there and limit me down to right where I needed to. It's keeping me right still in the money. Everything's still looking healthy. My deltas, look at that, 18, 20, 24. Volume still looking good. So when you mash it down, when you start to compact it more and more, what it's doing is weeding out the bad contracts that's basically the ones that are going to be sitting in with no volume. So that's why I keep it at a 20, because it focuses on the ones with volume. It focuses on the ones with good delta. It focuses on the one with good open interest. So it keeps me, with healthy contracts around, in the money, out of the money, in those type of areas where I can just deal with some good contracts. So that's why I keep it at least 20. I used to keep it at like 10, but I'm like, it was a little bit too much, like too expensive at sometimes. So I had to kind of stretch it out, to give me a little bit more leeway out of the 10s. And I like at least until the, the high teen area. So if I go to 20, instead of just knocking deal with, contracts at $4, $5, $6, but with still good delta, still good volume. So I'm staying around in that 20 because I know it's healthy. So boom. On SPX, do you ever trade? No. I thought about it, but I was like, nah, I'm good where I'm at. I mean, I don't know. I'm just comfortable with just the regular PM contracts, boss. I mean, like I said, I did think about it, because at first I didn't know what it meant, because I had to dive deep into it. I was like, ooh, AM. I'm like, what? I got excited overthinking it, because I thought that was contracts you can use to bypass the time. I thought that's what that meant. I was acting slow. I thought that meant that you could get in early, you could get in pre-market and all of that shit. And then once I start to do some research and understand on what that AM really means, I was like, oh, okay, now I get it. So now I understand what the AM means. That's why I was like, no, I'm good. I might as well stay with the PM. Because, again, I thought when I first seen that, I got excited thinking that meant you could trade in pre-market and all of that. But nope, that is not what that means. That is not what that means. I was like, boy, was I wrong on that one. So for those who don't know what it means, if y'all want to know, I'll tell you, I ain't holding it. Okay, your AM, all that means is your contracts expires early. So with the AM contracts, that means that say for instance, okay, you have the date of April 19th, right? And it expires tomorrow. The only difference with your AM contract means is that it's not going to go all the way out until the market close at 4 o'clock or 4:15. That means that your contract is going to expire in the morning at 9:30. That's what that means. So, yeah. So the AM means is that it's going to close before the market opens. That's what the AM means. It's going to close before. So your normal contracts is going to close towards the end of the market close. The 4 o'clock, 4:15. Those AMs just means that it's going to close before the market even opens. It's going to close at like 9:30. That's what that means. So that means that if you got an AM contract and you thinking that your contract going all the way to the 4 o'clock at the end on tomorrow on Friday, and you thinking it's going all the way out to 4 o'clock, 4:15, nope. That means that AM, yours is closing at 9:30 when the bell rings. That's what that means. That's what that means. Yours is closing before the market even takes place, like starts to get active. That's why I said if that's not what you want to do avoid getting those AM contracts, because the AM contracts is not going out all the way to the end of the market close, on that day. Like say for instance you got today's contract. Today's the 18th, right? But you had a 18 AM. That means that once the market opens at 9:30, your contract will be already expired because it's an AM contract, not a PM contract. So that's what that means. Because you got to think about it. Because after 12 o'clock, what happens to the time? You go from AM to PM, right? So it's going to close in the AM because, again, once you hit 12 o'clock, it changes from AM to PM. So, yeah. So, of course, it's going to close before then, which is why I almost did it because I thought it meant I could trade pre-market. But nope. Nope. I almost set myself up for failure. I almost did until I did my research. Yeah. Either a huge print or you lose everything all at once. Yeah, because again, those AM contracts is not going to extend out like your normal contracts. Again, it closes out in the morning. So yeah, that's why I don't do AM contracts. Nope. I mean, unless you're in a play and you up or whatever, you up good, and you can get out and just, be done with it. I mean, that's cool because you don't have to worry about holding your contract all the way to the end of the market. I mean, I can see that too. But, again, if you got a good contract and you good, I mean, just go ahead and get out of it. Do take an AM, so therefore you be done with it. But I use a PM anyway because I'm going to be out of that contract anyway. I mean, you see what I did this morning. I mean, I had a PM contract and I held SMCI, and all I did was wait for the bell to ring and I got out. Plain and simple. So that's all I did. I didn't hold it. I just got the hell out of there. I mean, and the thing about it, the beautiful part about that, my contract that I had, it wasn't expired to the 26th anyway. My contract wasn't going to expire till next week. But it made the move already, so I got out. So I ain't going to lie. I got the hell out. Yeah. Oh, yeah, no problem, boss. I got you. But, yeah, I mean, like I said, I just don't use the AM contracts because, again, I like to at least, hold it until all the way to the market close or whatever the case may be. Kind of let it ride it out or whatever. But, nah. Those AM contracts, that means it's going to shut off before damn near before the market opens. Because from what I read, that's what they said. They said that those kind of AM contracts close at 9:30 a.m. That's what that means. I think I know the answer. Do you even look at SPX in the trade? About? Wait. I think I know the answer. Do you even look at SPY? You talking about like the charts? SPY's charts you talking about, boss? Or are you talking about no. Nope. And the reason why? Because I know SPY's prices. I mean, I'm used to SPY's movements. What's this? This is SMCI. Let me go back. Come on, we were at SPY. But nah, because that means I'm going to have to learn SPY's prices. So I'm going to have to learn their prices, and I'm just used to SPY, and I already know SPY. SPX follows the SPY. So I already know my price levels. I know how SPY works. So that means if I was to go to SPX, I'm going to have to learn that. I'm going to have to learn that crap. So see, I'm going to have to learn all of these. I'm going to have to learn all the prices and all of this. I'm like, nah, I'm good. I'm going to just use it to trade with, but I'm going to use SPY as far as my focus point. I'm good with this. I'm good to just seeing my numbers in threes instead of fours and fives and crap. I'm good to just looking at 508s without all those extra numbers involved. Because all I can see is 3 digits. If I go to SPX, I got to see like 4 digits. See that? You got to look at damn near 4 digits versus 3 digits. So if I go to SPY, all I got to do is look at 3. Boom. I'm done. So I take that. Easy to read. 3 numbers, 3 digits. Easy to keep up with. I'm good. So, nope. And do I look at the strike prices? Nope. I ain't gonna lie to you. I go on my, I promise you. And it's the truth. I mean, this is a shortcut for me, and I'm just gonna be honest. I mean, I do take a little shortcut when I'm trading. But, even when it comes down to the, like to the options, trading, and, you're looking for a certain contract, I don't even look at the strike price. I ain't gonna lie to you. I don't look at this. I don't look at none of this. I'm just gonna be honest with you. I don't look at none of this crap. I'm gonna be real. Because I don't know the price to SPY. To SPX. I don't know it. So I don't pay attention to it because I don't use it. So the only one I pay attention to is SPY's prices. I don't pay attention to these prices because I don't know SPX prices. I'm just gonna be totally honest. So that's why I don't focus on the strike prices. The only thing I focus on is my date. I look at my date, and then all I do is go into my delta, which is where I got my stuff set up. Because you can set it up any which way you want to. You can set it up. See, I set mine up this way, so I can see my volume, my open interest, and my delta. So I set it up to where I can just mainly focus on these main areas of, when I'm looking for a contract. Now, after I do that, I'm gonna show you what else I do. I have a list that I use on the side of it, and I'll show you my list. So if I'm interested in a certain stock, all I do is take these numbers or whatever the case may be. All I do is like whatever I'm interested in. All I do is either copy the number and I just put it in here. I just go boom, paste, and boom, save, and then I go to my deltas. See, look at my deltas from tops to bottoms, from the strongest to the weakest. And that's all I do. Keep my bids, keep my open interest. The same things that I look at on here, I got the same thing set up on my my little ladder. And then I got my code set up to where I got to do is click on this and go straight into the ones where I got coded in one. So that's how I do it. So again, I got my arrow set for my deltas where I focus mainly on my deltas, because I always want to look for healthy deltas. Then I look for my volume and whatnot, and that's all I do. So I keep a list. I keep my list so I can look at my dates. See the 19, 19, 19. I can delete these because these are the 15. I don't need you. So I can take that off. Don't need you. 26, and I don't need you because that was 15. Boom. And I'll just weed out the ones I don't need. So I just focus on my puts, focus on my calls. That's all I do. And that's how I do my contracts. That's literally how I do it. I just keep a list of it. That's all I do. Keep a list, and then, I'm just focusing on my deltas. But yeah, that's all I do. Easy, easy, easy. I make trading for me as easy as possible, team. That's about the easiest way to do it. It's about the easiest way to do it. But again, the only reason why I don't focus on my strike prices is because I don't use SPX charts. That's the only reason why I use SPY charts. Which is why my win rate. I just focus on that because I just know I know how SPY works. I know how SPY moves. I know the personality of SPY. So all I do is, even though I know SPY, I use SPX to make the money. Easy, easy. Patterns. That's it. Focus on patterns. Boom, boom, boom. Instead of using SPY, SQQQ, TQQ, SPX. Easy for me. And then the beauty part with SPX, what I like about it is because you can do both sides. You can do calls and puts, because you already know with QQQ, you can really only focus on the call side. TQQQ, you got to focus on the call side because you already know those put sides on those are kind of shitty. I already tried it and they suck. So, yeah, because like I said, when you're using SQQQ and TQQQ, you got to focus on one side, right, of your contracts, on your panel. But when you got SPX, you can focus on both sides. You can focus on calls and puts. So that's what I like about SPX, because I know if I use SQQQ and TQQQ, I'm going to have to flip it, because I'm going to have to use SQQQ when the market goes down, then I'm going to have to use TQQQ when the market goes up. So in order to eliminate all of that noise, all I do is SPX that can go up and down. It works in both of my favors. I make twice the money on it. If it ain't broke, why fix it? That's all I'm going to say. If it ain't broke, why fix it? I make money on both sides. So what I do is I have two contracts. So I'll set up, I can show you right here. So I'll set up one that's in yellow for my puts, and I'll set up one that's in red for my calls. So if you notice, I got my different ones set up. So I got puts, oops, I mean do that. And I got them side by side. So I got one for calls and one for puts. So, okay, if I want to use, let's say for instance, I'm going through my little list on SPX. So all I would do, go down my list, yada, yada, yada. I'm like, okay, let me set up one for, I'm going to just pick random numbers. So, I don't like AM, go to regular. Here we go. All right, so like say for instance, I want to call. All I got to do is click on this. I'll just go to send to what code I want, which is 1. That's for my calls. Boom, it already sets that up. I got my charts and everything set in motion. All right, if I want puts, then I go back down. Instead of red, I go to yellow. That'll flip the bottom, and now I can watch both at the same time. So I can go for calls and puts on SPX. Both dated around the same time. That's it. So I have both of them set. So depending on which one I want to go with or which one I want to trade with, if I see a call opportunity, all right, cool. Let me knock out call. All right, if I see a put opportunity, all right, let me go for puts. Boom. So I got an area for puts, coded in yellow, and then I got an area for calls coded in red. So that's how I do it. And as far as my list, all I do is use, again, I just go here. Where you at? Let me detach it. And I got to set it in red because mainly I go for calls. So all I got to do is click on it, and it's going to change this automatically. See? Click on it. I think I already used this one already. Click on it. Boom. See how it changes it already automatically? I'll just click on like a certain potential contract I want. Click on it. Done. Boom. But yeah, I mean, I just find a way to just set it up and make it easy for myself. By making this about as easy as I can, y'all. That's it. Try to make it as easy as I can for myself. I'm trying to make life complicated. I mean, I have messed myself up doing that because y'all know that. I have got in the wrong trap. Don't get me wrong. I have did myself dirty before until I had to set it up better. Because one time I thought I had my call contracts when I was looking at my put contracts. Y'all see when I did that crap. So I've experienced that. So now I'm in the area. Now what I do is instead of trying to flip flop back and forth, depending on the direction of the market, I just kind of stick to one area at one time. I just mainly focus on calls. If we're in a bullish market, I just focus on calls. If we're in a bearish market, I focus on puts. So instead of swapping it back and forth, because sometimes you can mess yourself up doing that. I've done it before. You're jumping from a call, you jumping from a put, jumping from a call, and you mess yourself up doing too much. Don't do that. Just be focused on one direction and go for that. That's it. If it's a put day, focus on your put. If it's a call day, focus on the call. But don't be trying to juggle both at the same time, because I'm telling you, you're going to confuse the shit out yourself, because I've done it. You're gonna be thinking you're in a call when you're really in for a put. You're gonna go in for a put when you're really in for a call and mess yourself up, because you speaking to somebody who's done it. I've done it. Y'all witnessed me do it. Shoot, I ain't got no shame. I did it. I made a mistake. Shit happens, but I learned from it. But I'm not afraid to admit anything to y'all, man. I tell y'all the truth about everything. I gotta lie for. Come on, 95. Come on, 495. Give me what I want. If I can see this 495 drop, I mean, I can see it look like you want to drop to that 495. I want to see if I can beat AK-47, because he told me, nah, Jay, that's not going to happen. That's not going to happen today. I want to see if I can prove him wrong. Come on, Spy. Just give me that crack, because we got left? Got 6 minutes left. Just give me that little crack on down, man. Prove the AK wrong. Which I'm probably ain't gonna win anyway, man. He probably right. I mean, we probably see it tomorrow. We might get a gap down tomorrow. If we do maintain these lows going into tomorrow, we could see a gap down to that 495. Friday where you get the bounce back on up. I mean, matter of fact, I could see that. I could see, us holding this area here today and then gapping down tomorrow, where we do go down to 495, where your buyers finally then come in for a possible squeeze on up. So that would make sense. So I do see where he's coming from with that. Okay, that makes sense. All right, so you just doubled my remaining cash. Shout out to you, Gert. Boy, you wasn't gonna stop till you covered that loss high. He was so focused on that. Let me see. He said, okay, makes sense. Also, we don't have anything pre-market on SP. Yeah, that's why I said that's the only thing I hate about options, is that it sucks because you can't. And the thing about it is that's when majority of your best plays happen. Is pre-market and after hours when it comes to options, because half time you're missing it. You get the best plays in pre-market and options, and then you catch like the breadcrumbs of the move. It's like, man, I hate that. Sometimes you get the good moves in intraday, but majority of the moves happens in pre-market and after hours. Because let me show you for example. Because there was one that happened in pre-market. Nah, this was after intraday, but it was one that happened in pre-market. I mean, it's like something like this. When you're already catching the best part of the move in pre-market, going into intraday. See what I mean? That's the only thing I hate about that crap. Shout out to you, Martin. Thanks so much, boss. But that's the only thing I hate about that, is majority of your best moves happen in pre-market and after hours. Because it's like, okay, if we were able to trade options and pre-market, I'll be like, okay, cool. Let me jump in early here at 518 for the move back on down to the 510s, because I'll be already up $8. And, had I would have got in way up here in pre-market. And I'm like, But no. Don't get it's like don't give me what I want. Look right here. Man, had I would have got in the pre-market on this dump right here, 520. Boom, all the way down to 512. I would have been out of my trade already before the market even opened. See what I mean? All your good moves damn near always happening after I was in pre-market. I swear. It's like you dirty. But I love options. I can't lie on it. I love options. Even though that's a pain in my ass. Which now, what I started to do to get around that headache, swing trade. So what I do is I wait for patterns to set up so I can hold for a few days to, for it to do, like I kind of did with SMCI. So what I did was I waited on a pattern. So I went for SMCI. I waited for that breakout. I went in on my call. Oh, look where it's at now. Oh my God. Oh, I could have still been in on that trade. Oh, look at this. Oh, look at this. Oh, I could have still been in my trade. Whew. Man, I feel bad now. Because I had a feeling it was going to go back down towards that trend line. I knew that was going to happen. That's why I got in up here for that fall right back on down. But now we're getting too close to it. Ugh. Gotta wait for the next setup. Shoot. But tell me y'all doing no swing trades more than no, not doing no swing trades. I already made it. I mean, I already caught my move. I'm just gonna wait on the next setup for a swing trade, which I'm gonna sit back and watch. But no, I'm not jumping in on swing trades. Hell no, because these highs we already met those highs. See, I would have got in for a put that we would have had, came back up here towards the thousands, 980s, back. I could have got in a swing trade on this, 960 back into my old area, back down. I mean. Just saying, Morty. I mean, that would have been a nice little trade-off, but it's neither here or there. I'm not chasing. You know me, I don't chase. Come on now. But yeah, let's go ahead and head to the lobby team because the market is about to close. So let me go ahead and get everything. Well, let me wait for the bell to ring because we got 40 seconds. Wait for the bell to ring. God dang, you on those cancellations, Gert. Why are you on these cancellations, man? See, no, by you canceling, you know what that's telling me? That you keep second guessing yourself. Stop doing that. Anytime you have all those cancellations, I know what you're doing. You have a game plan, but then you kind of like you scare yourself out of the play. Just like what I was talking about before when I talk about those people that have a game plan, but they don't want to press the button. They have the game plan, but they don't do it. You have a game plan, but you need to stop second guessing yourself. Stop doing that. In order for you to stop second guessing yourself, the best thing to do, Gert, is just to go into those time frames and take a deeper look. Bell about to ring. But yeah, take a deeper look. But let's go ahead and go into the lobby so I can close on out. Let's go ahead and head into the lobby team. Let's go. All right. but Gert, definitely, I mean, and that goes for a lot of y'all, which we will be going over. Man, look like I'm going to have to start that boot camp. That bad habits boot camp. I'm gonna have to start it. Y'all, the breaking bad habits boot camp. I'm gonna get y'all in on that because I used to be like that. But look at Gert. Think about it. Look the way I trade. When have you ever seen me do a scared trade? You know me. The way I trade now, I get in. I'm telling you when I get in. I just did a swing trade like it wasn't nothing. More than happy to use me as an example. But no, we're going to do it together. But like I said, the best thing to do when the market is closed, even with a lot of you guys, man, just go looking at different time frames. See, the one that best, I'm going to tell you right now, the best time frame that helped me a lot, Gert, use that 180. Because you got TOS, right? If you got TOS, use the same one I use. I use the 180. You can use it for 184 hour or 180/12. But use those type of charts and look at the overall view. Look at the overall movement, and you'll get a sense of it. I'm telling you, that's the best thing to do. That's how I trade. It helped change my trading career. I'm dead serious. I mean, all I do is use that 12-hour chart to get the overall idea of where the market is going to move, and I'm good. But with that being said, team, let me go ahead and wrap it up. Let me give everybody a shout out. Let me go ahead and give a shout out to my squad. Gert, I see you, boss. Let me go ahead and give you some love here. Marty, thank you for returning. Jerhoff, thank you for returning too, boss. Coldplay, thank you for returning back for the Power Hour move. I think that's all we have for the returners, so I won't have to do too much. Let's see. I think that's it. Morty, my right-hand man always as usual. I think that's all that returned so far. Engineer, I did see you come through. Shout out to you, Queen. Go to Paquito, I did see you. Shout out to you, boss. I'm gonna give a shout out to the ones who did come through. Mr. Fix It, I do see you. Thunder, 965, I see you. Thank you for coming through too, boss. AR Trades, thank you as always. It's always a pleasure. Always a pleasure to have you. Let me go down even further because make sure I'm in the right spots. Let me see. 18. Yeah, today's 18. Active, thank you for coming through, Queen. Shout out to you, Charting Queen. I think I got everybody so far. AK-47 is always a pleasure to have you, boss, as always. I think that is it. I think that was all the ones that came through today. Jenna, shout out to you, Queen. Shout out to you because you did talk to me about spies, so that was another one. But I think I'm done. I think that is it. All right, team. But, man.
24 says, been here just watching you.
Oh, man, shout out to you, Jay. Man, you always hold it down, boss. Come on, man. Shout out to you. Yeah, thank you for coming through, man. But, yeah, team, definitely keep your eyes. Let me go back to SPY real quick to tell you what to look out for. We have no major economic data coming out tomorrow, so you don't have to worry about that. Netflix. Netflix, team. Don't forget about Netflix. Keep your eyes peeled on Netflix. I so forgot about that. That slipped my mind quick. Crap. I forgot about that. Now, damn it. Let me see. I forgot about it. It almost slipped my mind. Ooh, I almost forgot about it. Dang, how did I forget about Netflix? That fast. And I was telling everybody to watch out for the earnings data. What we looking like now? Ooh. We did get a spike. Let's go back to it real quick. Let me go back to my my lobby real quick. Let me go back. Yeah, I'm so sorry. I'm so sorry, team. I forgot about Netflix earnings. God, I forgot about that. I do apologize. So we did go on a nice little spike on up towards the areas of 640, back on down. We had the lows of 574. So right now, and I do apologize. I do apologize. I'm so sorry for that. I'm so sorry. Right now we are above 600 right now. Because I know we're gonna have what the earnings, the calls. Should be having the earnings calls. It should be right here. What is that on my chart? I'm trying to see if it pops up. Earnings call. Standard time. Should be what, 4:30 ish. What is the? I gotta go to Google. If I go to Google real quick, it should tell me the time. Let me hear him go to Netflix. Netflix earnings. Yeah, team, I almost forgot. I do apologize about that. Because I knew something was hitting me. I say, oh, Netflix, god dang it. That's what it was, Netflix. Nothing yet, schedule 18. Nothing yet. It's just scheduled for the 28th. It's normally around 5, like, I don't see nothing yet. Earnings for the earnings calls just yet. What would you say, boss? Oops, switch that back. My fault. Fix all this real quick while I still have y'all. Cause I'm soon about to get out of here, team. I just had to go over that Netflix thing with y'all. I forgot about it. I'm so, I'm saying it's going. Okay, got you, boss. Little boy AK came on through. Shout out to AK-47. You know what it is. So he is anticipating the movement on down. We are in the bearish market, so I am damn. All right, so let me see it. Let me see if I see a pattern. Damn, it's too late for me probably. I missed that high already. Look like yep, still on a downtrend. I have not made a pattern yet on it. I'm assuming you're getting out of here, team. I just had to make sure I had to go with this Netflix thing. I forgot all about Netflix. I almost forgot about it. It slipped my mind at the last minute. Damn. Oh, man. Why did I not get in on that? Oh, I forgot about it. Oh, I could have jumped in. Oh, look how much I would have been up already. Holy hell. Those highs of 640 all the way back down to, oh my goodness. I could have definitely got in. I forgot about it. Ugh. That's cool. I'm going to see how it's going to set up for tomorrow. So we already got the ideas of what we're going in for today. We're going to keep our eyes on tomorrow, see to see how low we can go. So let's see. Because I'm trying to look for the overall pattern. Damn, I missed it. Dang, I missed it. Head to the highs around at 640 right here. Tops, back right up onto 640. I could have wrote that back on down. That's cool. I'll wait for the next setup. It's all good. But yeah, team, let's go ahead and head back. Since we already checked it out. Let's go ahead and head back. Yeah. So we already checked out Netflix. Netflix is definitely getting rejected right now. So keep in mind that Netflix, the tops queen, definitely, as long as we stay underneath that 640, we definitely have room to continuously fall back down. So 640 is definitely your top. Stay underneath that 600. So, man, if I can catch another move back on up, I definitely want to catch that bad boy and rocket it on down again. But, team, I'm so proud of y'all, man. Shout outs to everybody. Again, if you do love the content, if y'all enjoying it, you getting good information from it, good content, do your boy a favor, do smash the like button. Subscribe, follow, whatever platform you're on, man, because we got to get the algorithms up and rocking and rolling, because I am trying to move into the partnership program. Also, from my other platforms, man, definitely help your boy out, because I'm almost into the partnership programs on that as well. So we're trying to get it up and rolling. So, again, subscribe, follow, like, comment, help get the name out there and all. Tomorrow is Friday. You already know I go half a day. I do not trade all the way through on Fridays because of the market, the volatility. You know how I am. If you not get the best thing to do is get as much as you can at the beginning of the market from 9:30 until 11:30, going into 12 o'clock, because you already know the first half of the market. You know how we do. No trade. Well, I traded this morning. I did a swing trade, but as far as the swing trade, no swing trades for me as of now. I will be sitting on my hands until tomorrow. I should be able to have a day trade tomorrow, so I might do a day trade and a possible swing trade. I might do both. But yeah, so far I'm up. I'm $3,000 away from 10 grand. Again, started with a $100 account. Now I'm up 10,000, almost close to $10,000. All I like to do is make 3,000. I'm good to go, man. I'm close. But I will be back tomorrow, same time, 8:15 Eastern, 9:15 Eastern, 8:15 Central. And I will be trading half of a day. I'm going to have half of a day for the live. Like I told y'all, I don't ever stay all the way because I'm trying to go enjoy my weekend. So I'm going to be in from, as a matter of fact, since I'm going to be in half a day, I'm going to tell you what I'm going to do tomorrow. I'm going to go in early. So forget the 9:15. I'm going to go in early. I'm going to go in at 9 o'clock, 8 o'clock. 9 o'clock Eastern, 8 o'clock Central. So instead of that 9:15, 15-minute bull crap, I'm going to be in early. I'll come in early. I got y'all. So I'll be in early. But, yeah, we're going to hold it down all the way until the lunch hours. And then after that, we'll be rocking and rolling and setting ourselves up for next week, which next week should be even more fun because we should be having Tesla's earnings coming up. So definitely keep your eyes peeled on that. So till then, team, I will be back. I will be knocking it all out. And I just want everybody to have a blessed night. And you already know what I'm about to say before I roll out. Maximize your reward, minimize your risk. Always put grateful over greed, and you will succeed every single time. Till then, I will see y'all tomorrow for Fast Cash Friday. Let's get it rocking and rolling, team. Peace.